Hey everyone, welcome back to Corporate Dakota, the place where we try to see if a company's future looks as bright as a newly minted share, or maybe a bit more like a stock option that has gone underwater. Today we're diving into a company that has been busy behind the scenes, and boy did they just ink a pretty interesting deal. We're talking about SKYX Platforms Corp and their latest report, which reveals some fresh financing and changes to how their special stock works. It's not going to be all sunshine and rainbows, but there are definitely some important things to unpack, especially with how they're raising money. So let's get right to it. The company SKYX Platforms Corp has entered into a securities purchase agreement. Think of this as an agreement to buy and sell company stock. This happened a little while ago, back in November, and they officially signed and closed the deal in early December for a cool $1 million. This $1 million came from an existing investor who clearly still has faith in what SKYX is doing. Now, what exactly did they buy? They purchased 40,000 shares of something called Series A2 Preferred Street OC. The price wasn't too shabby for the investor at $25 a share with no special price protection for the company, meaning the stock price could dip without affecting this per share price. This agreement itself isn't just a simple handshake, it includes all the usual legal stuff like promises the company and the investor make to each other, called representations and warranties, and also what happens if things go wrong, which is indemnification. The investor also gets some rights to have their shares registered, meaning they can eventually sell them more easily in the public market. And the big question, what's this money for? The company plans to use it for general operations, basically, to keep the lights on and fund their day-to-day business. Now, here is a key detail about this $1 million injection. The issuance of this Series A2 Preferred Street OC is considered exempt from the usual registration process with the securities regulators. This means they handled it privately, under a rule for transactions not involving a public offering. It is a common way for companies to raise funds quickly, but it means less oversight compared to a public offering. But the story doesn't end with just selling stock. To make this happen, the company had to make some official changes. On the 2nd of December 2025, they filed a document, a certificate of designation, with the Florida Department of State. This essentially defined the special rights and features of this new Series A2 Preferred Street OC. This special stock comes with some pretty specific terms. For starters, it's set to pay dividends, which are like a share of the profits given to stock owners. This particular stock gets a cumulative cash dividend of 8% each year on its initial price of $25. And these dividends are paid out every 3 months. And if they don't pay them on time, they start to build up, and the rate even increases to 12%. Interestingly, these dividends don't always have to be paid in cash. Up to half of the dividend can be paid out in the company's regular common stock. This is a way for the company to hold on to its cash while still rewarding these preferred stockholders. Sometimes, if both sides agree, the whole dividend can even be paid in common stock. And get this, up to 400,000 shares of common stock are set aside just to pay these dividends. Now, here's where it gets even more interesting for the investors. Holders of this Series A2 Preferred Street OC have the option to convert their preferred shares directly into common stock. They can do this at a set price of $2 per share. This is a significant flip from the $25 purchase price, and again, there is no price protection. So this conversion price is fixed regardless of the common stock's market value. And as if that wasn't enough, for 2 years after the deal closed, the company can actually force these preferred shares to convert into common stock if certain conditions are met. This is a pretty strong clause that gives the company more control over its capital structure. To ease a limit though, they can't issue more than 19.99% of their common stock through these conversions without getting approval from their shareholders. What about the company buying back this stock? Well, starting 3 years after the deal, SKYX can choose to redeem or buy back all or some of this preferred stock. If they do, they'll pay back the original $25 per share, plus any dividends that haven't been paid yet. This gives them an exit strategy for this particular class of stock over time. In the absolute worst case scenario, if the company were to close its doors, the holders of this Series A2 Preferred Street OC get paid back their original investment of $25 per share, plus any unpaid dividends before the common stockholders get anything. This reinforces the idea that preferred stock generally has a safer claim than common stock. So where does this Series A2 Preferred Stock street, and compared to other types of stock? It ranks higher than the company's common stock and any other stock created later that doesn't specifically say it is equal or senior. It's on the same level as other preferred stock like Series A and Series A-1, meaning they'd all be treated equally in certain situations. This stock doesn't have a set maturity date. It just keeps existing unless it is converted or bought back, and once it is retired, it is gone for good. When it comes to voting on company matters, these preferred stockholders usually get to vote alongside the common stockholders, as if they had already converted their shares. However, they also get a separate say on anything that specifically affects their rights value or how they convert. The company also cannot issue more series and -2 stock, create new stock that ranks higher, or make changes that hurt the series and -2 holders without getting approval from 51% of those preferred stockholders. This gives them a good amount of influence. And of course, no filing is complete without listing the exhibits, which are the actual documents that back up all this information. Looking at this whole picture, SKYX Platforms Corp is using a common but effective strategy to get quick cash. They're selling preferred stock with specific benefits to investors, which is generally less risky for the company than issuing more common stock at what might be an unfavorable price. The terms of this Series A2 Preferred Street OC are quite player friendly for the investor, especially the $2 conversion price, which, while attractive for them, dilutes the value for existing common shareholders significantly if it ever gets converted. The company's ability to force conversion is a big deal and shows they plan to manage their shareholder structure actively. The main risk here is the potential for massive dilution of common stock. If the company's common stock price stays below the conversion price, or if the company forces conversion. The 8% dividend, while seemingly reasonable, also adds to the financial obligations. The fact that they are raising capital this way suggests that perhaps traditional debt financing wasn't as accessible or favorable. Ultimately, SKYX Platforms Corp is making moves to fund its operations, but the current terms of the Series A2 Preferred Street OC heavily favor the investors. It will be crucial to watch how the company uses this capital and whether its business performance can justify this dilution to its existing shareholders. The direction is clear, they are prioritizing immediate funding, but the cost is potentially significant dilution and increased future obligations. Alright, that is our breakdown of SKYX Platforms Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this funding strategy is smart or a sign of trouble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And don't forget to subscribe for more deep dives into corporate documents. Also, make sure to check out our Discord community linked in the description down below. It is a great place to discuss all things corporate finance. Thanks for watching, and we'll see you next time on Corporate Decoder.